Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next to. In this video, I'll be analyzing the charts of Euro USD and GBP USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the hourly chart or 1 hour chart of Euro USD in front of us. And if you are an active trader, then you must be knowing that Friday US session was a crazy session and mostly because of gold. DXY was trying to go up, but there was a big fall after the news. Bond market started falling and gold started flying. But sadly, we did not see that much of action on Euro USD or GBP USD. Okay. And we can see that overall the market is still sideways here. At the time of news, yes, market did form a big green candle, but if we try to look at the overall trend or clarity, then sadly we do not have a proper answer. If we look at the market sentiment, we can see dollar edges lower and gold soars on weak US economic news. The US Feb ISM manufacturing index unexpectedly fell minus 1.3 to 47.8, weaker than expectation of an increase to 49.5. US Jan construction spending unexpectedly fell minus 0.2% month on month, weaker than expectation of plus 0.2% month on month, and the biggest decline in 15 months. The University of Michigan US Feb Consumer Sentiment Index was revised downward by minus 2.7 to 76.9, weaker than expectation of no change at 79.6. And if we combine all the factors, then yes, it brought pressure on the chart of US dollar index, as a result of which we saw this big candle on Euro USD, also on GBP USD, and also on other USD pairs. So first of all, let's look at the chart of DXY first. You must be knowing that DXY is trading inside a range, and we can still see that DXY is trading inside a range only. As we have already discussed, that if DXY really needs to continue the upside, it will have to cross 104.20 and move higher. DXY has been trying a lot for quite some time but unable to sustain above it, and market is still trading inside the range only. And we have seen the market sentiment. The market sentiment is not very positive for US dollar. So in the coming days, if DXY starts going down, if DXY breaks the levels like 103.5, 103.6, don't be surprised. There's a high chance that DXY will be heading towards 103 level. After all, market sentiment is above all, and the market sentiment is not very positive right now for the US dollar index. And if you look at the chart of Euro USD, we can see that after the up move or after the trend reversal, market is sideways. Market is taking support around 1.0795, 1.0800, and market has been taking support around this area for quite some time. So on Monday, the volatility of the market is going to be very important. Right after the market opening, if you see DXY showing some correction, showing some recovery, in that case we will see down move or some downside on Euro USD. If not on Monday, at least by Tuesday we can expect some sort of buying around 1.0790 area on Euro USD. Why 1.0790? Because the market has been taking support of 1.0800. There's a chance that market may show a little bit of price rejection from below this time. Market may try to hunt down all the tight stop losses around 1.000 and may take support around 1.0790, 1.0785 area. And in case market surprises us with heavy selling pressure, in that case our next support will be 1.0768. This is our next support on the chart of Euro USD, or the best support. If you're wondering why, then let me show you. Here we are using FIBO. We can see that we have FIBO 50% retracement at 1.0790, as well as market has taken support previously around the area. And we have FIBO 61.8% retracement level around 1.0768 area, plus previous support around the area. If we combine all the factors, then yes, in this market condition where Euro USD is choppy in nature, we can definitely expect an bounce, at least a temporary bounce, as a day trader. Right now, we do not have any clarity regarding the direction of Euro USD. So if you're looking for safe trading opportunities, then it's better to trade from level to level only. Instead of taking a position and sitting on it for a couple of days and weeks, try to trade from level to level. That will be much safer for you. And on the other hand, instead of going down, if you see Euro USD going up, in that case, we have resistance around this particular area, 1.0864 to 1.0850. This is a whole resistance zone on Euro USD. So if you see the market is going up, observe the volatility. Volume and volatility will be very, very important. If you see the market is going up, but the size of the candles are like this, it means the market doesn't have much volume. In that case, you can look for a sell around this area. Just like the support of 1.0800, market has been testing the resistance for quite some time, and market doesn't like common things. So if market breaks the level and starts going up, in that case, you can look for a sell around the next big resistance of 1.08. Wait, let me write it down. 1.0885 to 1.0915. This is the next big resistance on the chart of Euro USD, where you can look for a sell position. But you can see it's a huge box, and I can't help it, my dear friends, because you can see we have multiple resistances, multiple price rejections. So it's a zone. It's a zone. So if market breaks this level, because it has become too common, you can look for a sell around this area. But right now, again, I'm repeating, we do not have any clarity regarding the direction of the market. So things are not very positive. So try to trade from level to level only. That seems to be much safer option right now in front of us. Because in choppy type of market, buy at support, sell at resistance is the best trading strategy. Most people lose money in choppy market, sideways market, because we lose our patience and we enter on the middle of the chart, as a result of which we get trapped. To avoid getting trapped, wait and wait. Trading is boring, okay, I can understand, okay, but if you are looking for better trading opportunities, then you'll have to wait. In this type of market situation, powerful custom indicators like chart prime can be very useful for traders like us. Chart prime not only generates buy and sell signals on the screen, but it also helps you take your trading to the next level, because they have three powerful indicators: Market Oracle Pro, Market Dynamics, and Prime Oscillator Pro. You can see these are the types of signals on the screen that chart prime generates. And if you are tired of Telegram signals, then yes, chart prime can be very useful, because it tells you where the trend of the market is strong, where you can go for sell, where you can go for buy. And the Prime Oscillator Pro is also very useful, and it also generates signals for you. You can see the oscillator not only tells you about the overbought, oversold levels, but it also marks the divergences for you, so that by understanding the momentum of the market, also you can take buy and sell positions. To know more about the chart prime indicators, you can just go to their tutorial section on the website, and you will see a long list of videos where you'll get the complete picture how powerful they are. Right now they are giving a 7 days money back guarantee, so you can definitely check out chart prime if you're interested. And if you don't feel that okay, chart prime is a cup of tea, then obviously you'll get your money back. But if you're looking for a solution, then yes, you should definitely give a shot to chart prime. Now let's look at the chart of British pound, US dollar, GBP USD. As I have already discussed in my previous video also, that things are not very positive for GBP USD. Okay, at least on Euro USD, we can see that after the down move, market went up and now market is sideways. So buy at support, sell at resistance is the strategy for us. But in case of GBP USD, things are so critical. Okay, because if you look at the overall trend is sideways, and in sideways market, buy at support, sell at resistance. And you can see this is a 4-hour chart, and market is not coming to support or resistance. So as a result, the number of trading opportunities have become very limited. Okay, and if we switch to a lower time frame in search of trading opportunities, we can see, or we saw actually, not we can, or we saw the market was in uptrend. So we were just following the present trend of the market and we were looking for buy. But right now there has been a transition. We can see that market is changing the structure internally. The overall trend is still the same sideways, but internally we can see that from uptrend market is going down. So if you have any position, buy, sell, doesn't matter. If you have any position, be on the trade, because in this type of crazy market, you usually get the exit. Okay. And if you're looking for fresh position, then I'll say that if you do not love GBP USD madly, if you're not madly in love with the cable, then please stay away. But if you if you want to trade on GBP USD, then I can suggest that you can look for a buy around 1.2570 area. Okay, you can look for buy around 1.2570 area, because we can see market has been respecting our FIBO level. As a day trader, if market hits the level and bounce back, you can look for a buy. That is the only trading opportunity that I see on the chart of GBP USD, because overall trend is something else. The present trend is changing, things are crazy. So yes, if market drops and bounces, you can definitely look for a buy around 1.2570 area, because of FIBO 78.6% retracement level. And if you're planning to take a buy position around this area, then it depends on you. Okay, it depends on your personal experience and your strategy, because personally I will not be going for any position around this area, because I can clearly see that there are multiple price ejections. So obviously this is a no trading zone for me. Okay, but if your personal strategy says that go for a buy, you can go for a buy. That depends on you. But if you ask me, Avilash, where should I go for a position on GBPUSD, I'll say that it may require a couple of days, but yes, 1.2572 seems to be the only logical trade in front of us on the hourly time frame. And market has been very choppy, strong price ejections from both the sides, so I will not switch to lower time frame. And if you really want to stick to a higher time frame, then still buy at support, sell at resistance is the only trading strategy on GBP USD. If I'm wrong, if your opinion varies, please write down in the comment section. I would love to learn, because I am also tired of GBP USD. Anyways, thank you so much, my dear friends. Have a lovely weekend. Bye bye. Take care.